In this video, we're going to look at 9 sayings and phrases you hear from only losing traders. Stay tuned. Hey traders, a very warm welcome to you. If you're new here, hello and welcome to the channel. If you're an old hand and you're familiar with it, welcome back. Okay, so 9 sayings and phrases that you only hear from a losing trader. These are head in hands type phrases. And yes, I have said probably most of these at some point in my trading career. Maybe you have too. So let's go. Number 1. I'll make it back on the next trade. Oh, ouch, ouch, ouch. If you're thinking, hey, I'm going to make it back on the next trade, that's just the worst possible thinking. You can't put that much weighting on one trade, and you can't be thinking about making anything back. You've got to think of the process. It's not about how much you're down or how much you're up. It's the process. If you are thinking, hey, I will make the money I've lost back on the next trade, you are going to dig yourself a huge hole, because eventually you'll have such a lot of losers. You'll have to have a massive position size to make it back. And you know what will happen? That trade will be a loser too, and bang, there goes your account. That's probably a really bad one. Quite a common one as well. Quite a common one. All right, my broker ran my stops. I hear this quite a lot, and yes, you know what, there are instances where maybe in the middle of the night brokers widen spreads to ping stops. It's rare as anything, guys. Honestly, it went on many years ago. Does it still happen now? I very much doubt it. Maybe there are instances of it, and the way that they do it is that a scrupulous broker would widen the spread in overnight, and then that spread will be enough just to ping a selection of stops and then narrow it again. To be honest, have they got much advantage to doing that? Probably not. Unless unless there's specific traders that are doing this. Anyway, the point is, it's seriously unlikely. Does it happen? Has it happened? Yes, yes, yes. Is it a reason why you've been stopped? Probably not. I would take a hazard guess that it's not. It's because your stop is too tight. It's in the wrong place. You've made a wrong trade. A stop is there for a reason. Brokers will not be running stops on a regular basis. If you think that's what's happening, you need to take more charge of your own decisions. Okay, number 3. I've lost my last 5 trades. I'm due a win. Ow, youch. This is a horrible one. It's the same kind of thing of this, but if you've lost you're thinking of it in terms of a gambler's fallacy. That's the word. That's the phrase. Someone like spins a roulette wheels, red, 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 red. Oh, it's got to be black next time. Hey, the market's got no memory. The roulette wheel's got no memory. The next trade could easily be a loser. You can have 500 losing trades in a row, 5,000 losing trades in a row. I'm sure some poor guy has out there. It doesn't matter. You need to forget about that and just focus again on the process. Nothing about due a win, and also framing it in win and loss is a losing proposition as well, in my opinion. Number 4, my entry is late, but this hill still has room to run. What does that mean? So you know what it's like. You're in a trade, it kind of pushes up. You get in it, you think, oh, I'm chasing this a bit. I've missed the sweet spot, pull back entry. I'm buying at highs, but you know what? It's still got room to run. Forget it. That is, if you've got that mindset, you need to not take the trade. The trade needs to be valid between here, and it's fine. If you're thinking that, oh, I feel it's a bit late, you're always going to be, you're never going to have a positive expectancy with that, because you're always going to be the slightest pullback. I knew I was late. That's planted the seed of doubt in your mind. So if you're trading and you're late and you feel you're late, you don't want to get in. If I feel I'm late, don't get in. Or the decision comes in, hey, it's going, I'm going to get in late because it's going to go anyway. It'll be fine. No, that's not the way to trade it. You've missed it. Define how to analyze and get on the right sweet spot next time, but don't ever go into a trade that you believe is late, because even if it's right and you get a good profit from it, any slight pullback or any kind of thing, you're going to say, hey, I knew I was late, and get out. Plus the stop is way wider as well, don't forget. Okay, what we're here. Number 5, I will exit if price comes back to break even. Have you ever done this? You've gone into a trade, maybe too much size, you've got this, it's got against you, like, oh, if it comes back to break even, I'll get out and I'll never make that mistake again. I'll never make the mistake again. I'll never trade too much size. I'll never trade this market. I'll never do this. I'll never do that. And you're just hoping and praying that it comes back to break even, and it comes back to break even, and you get out and you think, oh, thank you, I did it. And then what happens further down the line, you get yourself in the same situation. This is a horrible place to be, guys. If you are hoping and praying that the price is going to come back to break even, you are out of the game. You are well out of tune. You have got no chance with this mentality. I'm sorry if that's a bit harsh, but hey, I've had this scenario myself. I've had this situation where I've just comes back to break even, and then you think, why are you thinking like this? This is kind of course, we all have to go through this journey as a trader, but you've got to trade, it's gone against you, you're down a lot, you've maybe not honored your stops, your position size is too much, you say you've come back to break even. It needs to be, hey, break even doesn't even matter. The market doesn't care about break even. You're framing your trade about, again, your win and loss, which is wrong. It should be, hey, this is my stop, this is where the trade's valid, this is where it's not, this is the exit. But thinking about it in break even and then hoping that you can get out and saying, oh, and feel like that's a reprieve from the mistake as well is kind of a bad mental picture to have. All right, I don't need a trading journal. Pretty self-explanatory, this, guys. If you haven't got a trading journal, you can't measure and improve, or sorry, you can't improve what you don't measure. And measuring it just means writing down the stuff. We talk loads on this channel about trading journals, the advantages and how to do it, and even ways to do trading journals if you can't be bothered to write out anything. Different ways. There's no real excuse for not doing something. And someone who says I don't need a trading journal is someone who says I don't want to improve. It's simple as that. All right, number 7, I'm going to second guess my trigger. This is one of them for you guys who are trading kind of systemized stuff, waiting for maybe a bearish engulfing, a bullish engulfing, a pin bar, this or that or the other, something that requires a close above or below. You're second guessing it. So it's half an hour before the close, it's going to close above it, I'll pull the trigger. The point is with that is, you're not honoring your discipline. You're not saying, hey, I'm disciplined enough to wait for this, I'm going to pull the trigger when this happens. So that's one, you're breaking the discipline muscles that you're trying to build up. And number 2, you're not sticking to the strategy. So you can't have a decent data. You can't say, hey, this strategy's worked, or this strategy hasn't, or this strategy's worked, how can I improve it? Because half the time you're taking it at the close, half the time you're taking it too early. It makes no sense. You've not got proper data to go from. So if you start trying to second guess your trigger, if you've got a specific trigger, then you need to rethink that. All right, number 8, the markets are random. Hey, this is my take on this. I think the markets are random a lot of the time. You have times when the market is just doing anything. The volume's low, it's pinging back and forth, up 10 ticks, down 5 ticks, up 2, down 1. I call that choppy. I don't think there's any pattern to it. Maybe there is. I think it's more like a random market then. And why I think it's random then is someone could come in with any size, not a very big trader, and suddenly decide to buy or sell, and there's no real justification for that guy making that decision. You don't know when he's going to do it. You don't know why he's going to do it. Like if you're walking down a street, you look like you're going to collide with someone. He's going to go left, he's going to go right. You don't know. If there's an obstacle there, he's probably going to go the way there's not an obstacle, but you can't really guess it. However, if you've got a market condition that is maybe a lot of supply demand, pushing through key levels that everything looking at, then it becomes not random, because there are repeatable patterns that are profitable in the market. Why do you think some hedge funds have been in business for so long? Some traders have made money using setups for so much money. This can't be from a random occurrence. Sure, you might get some people who are relatively successful, but you see these guys who are making good money, then they kind of back off a little bit, then they make good money again. You know, that is not the sign of a random market. And that's just an excuse that many traders will use when they say, hey, you know what, it's a random market. And of course, economists will say, hey, it's random, and they'll give you all sorts of data to show that. But at the end of the day, no one can kind of say, hey, well, how come these guys have made multi-millions and billions from trading the markets? Or even, you know, retail traders who are making, you know, 6 figures, 7 figures plus a year on a consistent basis over time. Can that be from a random market? It probably not. All right, last one here, guys. I'll use proper risk management when I make good money. Oh, this is a bit of a stinger. You've got people who trade on a small account and say, you know what, I'll just trade whatever size I want. It's a small account, it doesn't matter. I'll swing for the fences. When I have a bigger account, I'll have to use proper risk management then. It just changes the game completely. You know, if you can't trade properly with a small account as you can with a big account, you're never going to mirror the same success, because you're going to be cautious about it. You're going to not want to lose money, so your stop will be there. So what was a winning trade in a small account because you didn't care is now a losing trade in that account. It will change the metrics and the performance of the account ridiculously, massively, should I say. So never use that. Always treat a small account the same as you would a big account. Use the correct risk management and develop a strategy and a risk management thesis and plan as if you were trading £10 million account, whatever size your account is. All right, guys, there's 9 for you. probably some more coming up in another video. Take care. See you next one. Bye bye.